Hey guys, welcome to Simpler Futures for Thursday night, February the 9th. Our free video. I want to welcome you to Simpler Futures and take a look at the E-mini S&P. And we're looking at levels in here that we've not been before. Let me do a daily chart. And when you see a daily chart and you see a little bubble up here like I have today, that's showing you that's an all-time high for this contract. Well, this is an all-time high for the S&P, and with the levels that we've been trading at 2307 now, do you get frustrated a little bit? Do you get in here as some of the people that I talked to today? Man, how do you get in this market? How do you trade this thing? What do you do when the market's just so strong it comes in here and you don't have too many opportunities? Sometimes you have to simplify. And let me go back on a 5-minute chart here to get some more in. Now this is a 5-minute chart. Here's the market. It opens up this morning, and then we see this huge move. It runs away from you, and we run here from 2293 level. Where was it on the open? The open was at 2293.75, and we run to 2304. A good 10, 11 handle run in the first hour of trading, or first 2 hours of trading. Really strong move in here, and then we go dead. Then we finally break out and go to a new high, and then we pull back a little bit. How do you trade this? What do you do? Do you wait for the pullback and then you get long and then the market doesn't move? Or you see the breakout, I've got this breakout, I'm going with it. How do you know when to go with it and when not to go with it? Well, number one, I look for a rotation off of the squeeze. This morning, right on the open, we saw the momentum really jump hard. Now there's another one. There are 3 things on this chart that I think is important to look at. First of all, moving averages. 5-minute chart, what's the direction? Up. Expanding the distance between the 4 I've got here. I've got an 8, a 21, a 55, and a 100 period exponential moving average. They're all expanding. We've got momentum on our way. The MACD is crossed and running hard. Well, the MACD begins to cross in what's time? That's when you get cautious in the market. You wait for a pullback, wait for another move down in here. The market is strong. If you're watching the spread of the volume between the advancing and the declining issues, you've got something you can follow. And that's what you do. You don't trade against these averages. Don't go up here and think, oh, there's a big run, I'm going to short it. You may scalp it for 5 points, or for, in this case, about 4 ticks, but then it's going to turn around and just chop your head off. So watch it closely, guys. It's a good way to trade. Follow these moving averages. Moving averages don't lie to you. They can't lie to you because it's taking the prior data and showing you what's going on right here. You can tell, well, when they are expanding, the market is getting stronger. When they begin to contract, start reining in your trades. Be careful. Know what you're looking for. If it crosses like the 8 and the 21 cross, know that we may have a little bit of a pullback. What happens? Here's one right here, and the market pulls back. That may be the pullback that you're looking for to buy this market. Another one that I think you ought to be looking at is this. If you've got Thinkorswim, ZW minus /ZC. What is this? This is a wheat corn spread. I'm looking for this maybe to work back out when we got down in levels. We had a crop report today, and I'm going to show this. Let me find it. Let me go and change it real quick to a line chart. And that's what you want to take a look at. And appearance, not candles. You want a line. Apply. Okay. And this line right here is giving us the distance. Disregard the green, the yellow, the blue, the red. We're looking at this green bar right here, the green line, where we are right now, 72, 73 cents. I'm looking for it to possibly work our way back up to close to 90 cents in here, buying the wheat and selling the corn on a spread basis. It got down to 50 cents and I started looking at it and bought it. I bought in several times on pullbacks. If by some chance you want to wait and see if we get a pullback in here to the 58, below 60 cents, I still think it's a pretty good opportunity for you to own it. What's this mean? Say a move from 60 to 70 cents, that's a 10-cent move, that's a $500 move. If the market tanks, you're protected a little bit with the corn. If the market runs really high, I think we'll get the spread between the wheat and the corn to expand, because wheat is growing right now. The corn crop is already grown. It's in the grain bins and will be producing more pretty soon. The wheat right now, more of a demand because you can get more protein out of wheat than you can corn if you're feeding it, and if it's cheap, that's the way to go. Guys, good trading. See you in the next video.